the bankruptcy court will basically go through and try to find any assets of value. So, I mean, they still have some tokens and value. They have a venture portfolio. I think Sam owned 9% of Robinhood. I spoke to Sam about, he was trying to raise emergency financing and things like that. And I spoke to CZ about why he was considering buying the asset. I thought it was a bad idea. But my understanding of what happened at this point, and again, I don't have all the facts, this is just my understanding, is that, FTX was in a position where they had this market maker, Alameda, that was investing in risky things. And that's fine. Like market makers, hedge funds, they're designed to take more risk. It appears at this point that back during the last shakeup in the crypto industry where, Terra Luna and Voyager and Celsius and Three Arrows went
After the FTX collapse, many still wonder who knew what was happening and who could have prevented it. Sam Bankman-Friend criminally used people's funds, but he was also talking about the bankruptcy before it happened with people like CZ, Binance's CEO, and Brian Armstrong, Coinbase CEO. Today, we will have Brian explain everything and the conversations he had with both the owners of the exchanges. Not only that, but he even goes further and explains how this won't happen with his company and how people may get their money back if that's even possible. So pay close attention until the end if you want more clarity on where you are putting your money and preventing these situations in the future.
I think we were all shocked that somebody like Sam, who seemingly is so smart and capable, ended up in this situation where he appears to have done something quite unethical and illegal. So, my job right now this week has been to go out there and just help people understand that Coinbase is not like that. We've been pursuing a different strategy for the last 10 years. We're a public company. We're regulated. Our financial statements are audited. They can show that, customer funds are segregated. They're backed one-to-one. We're not investing customer assets without their explicit direction. And so that's been the first step, is just to make sure people understand that. But then after that, we need to kind of think about how we go forward as an industry here and both take a long-term perspective, make sure the good companies in the space aren't allowing one or two bad actors to kind of mess it up for everybody else. And then it feeds into the whole regulatory story too, because companies like Coinbase are already regulated, but we're regulated like a traditional financial service business. But we don't have clarity about the crypto specific regulations, like what's a commodity, what's a security. And that lack of regulatory clarity, I believe, has pushed a lot of this business offshore to these less regulated exchanges. That's part of what caused the blow up today. They were based in the Bahamas. I spoke to Sam about, he was trying to raise emergency financing and things like that. And I spoke to CZ about why he was considering buying the asset. I thought it was a bad idea. But my understanding of what happened at this point, and again, I don't have all the facts, this is just my understanding, is that, FTX was in a position where they had this market maker, Alameda, that was investing in risky things. And that's fine. Like market makers, hedge funds, they're designed to take more risk. It appears at this point that back during the last shakeup in the crypto industry where, Terra Luna and Voyager and Celsius and Three Arrows went under, it appears that Alameda took a big loss at that time as well. They may have even been underwater. And instead of just saying, hey, this hedge fund's going to blow up too, which would have been unfortunate. People would, Sam would have lost money. It's embarrassing, but it's not illegal for a hedge fund to blow up. It happens with some regularity. Instead of just letting it blow up, it seems like at this point, he took customer funds. They had this solvency issue. And instead of just letting it blow up, Sam basically said, hey, we have a bunch of customer assets over here at FTX, or he somehow basically made a loan from FTX into Alameda to try to prop it up. I don't know why he did that. I mean, that's the moment in my mind where he crossed the line into probably committing fraud. And I think he probably lied to users, lied to investors, and he went around and tried to bail out these different companies like Voyager and BlockFi and to sort of prop up this thing. And maybe he thought he could trade his way out of it or something. I'm not sure, but that seems to be where the mistake was made.
Did Brian see this coming?
I have to say, I did not see this coming. Like he appeared to me to be a very bright, credible, competent person. perhaps a bit young, perhaps, a bit reckless at times, but not unethical and not committing fraud. I definitely did not see that. If I look back to see, were there any warning signs that I should have thought twice about it? One of the things I noticed was that in 2021, Coinbase had a good year. We did $7 billion in revenue, $4 billion of positive EBITDA. We became public as a company. At that time, FTX did about $1 billion in revenue. And I knew how much money we had for our venture budget and just like different investments we wanted to make. And I knew their revenue. And I had to scratch my head a bunch of times. And I was like, where is this guy getting all this liquidity? Because he was like buying 9% of Robinhood. He was putting like $1 billion into this. He was donating to all these politicians. And I was like, it did not make sense to me where he was getting all this cash. People just kept telling me, oh, his market maker Alameda is just printing cash. And I was like, okay, I guess, it seems like a conflict of interest to own an exchange and a market maker. That's why we haven't done it, but more power to him, I guess. And so I was surprised. I didn't speak up. I can't explain the psychology of it at this point, whether he's a pathological liar or if he's started off good and somehow under the pressure of this whole thing went bad. But the minute you can go watch the interviews, he's lying to people about why he's bailing out Voyager and BlockFi and he knew at that time that most likely he knew at that time that they were not solvent. Alameda was not solvent, and so that's where he crossed a major line in my book.
So, how safe are you using centralized exchanges these days? What's necessary for an exchange to be considered safe?
We're regulated as a trust company, a money transmitter, etc. You're required to hold customer assets one for one, denominated in the asset. So in other words, if you say the customer has one Bitcoin, you have to hold one Bitcoin. If they say they have $100, you have to hold $100. And so that's the case with Coinbase. You don't have to take our word for it, by the way. You can look at our audited public financial statements as a public company with an independent, Big Four accounting firm who went to go verify all of that. And that's what various custodians and exchanges, that's what they all should be doing. By the way, if you're regulated as a bank, you can actually go invest some of those, but there's very strict regulation around that and capital requirements and whatnot. And we're not a bank. So we hold one-to-one. Now, if you're an investment fund or a hedge fund or something like that, then you can try to take positions in different coins and different assets, and they could go up and they could go down. You may lose your investors' money, but there's no such thing as the customer assets being involved in that. There needs to be clear segregation of those customer funds and from what an investment fund would be or corporate funds. And that's where they got in trouble. They basically commingled customer funds with their hedge fund.
According to Brian Armstrong, since exchanges are not banks, they must own 1-to-1 ratios of all the user funds. But were FTX and Sam doing the same? We don't think so. Otherwise, they would have used their backup funds to help Alameda, which also belongs to Sam Bankman-Friend, instead of risking people's assets. But we also believe that there's still more blood in the streets to happen. Just check this out.
I think there's other firms that had, first of all, there's firms that had money just sitting in FTX, and that's now going through bankruptcy court. So that's been bad. I mean, Multicoin came out publicly and said that they had 10% of their portfolio sorted on FTX. There's other firms that Alameda may have had loans with, and those firms are probably struggling. I don't want to say who, but we have received a couple of inbound calls from other people trying to get emergency financing. There's people who may have just totally different from FTX and Alameda. They may have just had their own portfolio that they took margin or leverage on to buy crypto, and now as the prices have come down a little bit, they're getting stopped out. So that's all been very challenging. And I again, just for the sake of clarity, I should say that Coinbase did not have any material exposure to Alameda, FTX, or FTT token.
More firms are involved with FTX and Alameda, but no one has yet revealed their names. And if they are being stopped out, some may be filing for bankruptcy right now. Are these other centralized platforms? Who knows what's happening next? But the real question is, can people recover their money back? And what's necessary for things to be done right?
The bankruptcy courts will essentially, and I believe they filed bankruptcy in the US, which is an interesting thing. I didn't know why they did that versus Bahamas. But anyway, the bankruptcy court will basically go through and try to find any assets of value. So, I mean, they still have some tokens and value. They have a venture portfolio. I think Sam owned 9% of Robinhood. There's various things that they may own. And then they'll kind of auction those off to various bidders on distressed assets and then try to distribute those funds to the customers. I don't know the exact process beyond that, though. And we have had a lot of productive dialogue with both the SEC and the CFTC and Treasury and all kinds of people in Congress. And I do think the US is making some steps in the right direction. There was a bill going through Congress recently called the DC CPA, or the Stabenow-Boozman bill, although it's having some challenges now, frankly, due to this FTX blowup, because SBF was one of the people sort of pushing that bill forward. But regardless of that, the sort of system that we should have is there should be a clear designation between what is a crypto commodity, and that can be regulated by the CFTC, and what is a crypto security. Now, this is one of those legal, by the way, what is also a stable coin and artwork and other things that are not any of those things. The challenge lies in that there's kind of a fuzzy line between what is a commodity and what is a security. And a lot of this law is based around the Howey test, which says a security is an investment in a common enterprise with an expectation of profit. And so it's basically a point-based system. And in the absence of really getting a clear list between the CFTC and the SEC are in this turf battle, I would love it if they could basically put out a list, get their heads together and put out a list. Hey, CFTC is going to do these, SEC is going to do these. A bunch maybe are in the middle. Let's let the courts figure that out or whatever. But that just hasn't happened, and it's a missed opportunity in the US.
What do you think? Is there more blood in the streets happening behind the curtains? Could this be a positive event making regulation happen faster and protecting people? Or is it just the beginning of a way bigger hole? Let us know in the comments below. Thank you for watching.